Money. Money has played a significant role in world history, with its impact on almost everything in human existence. Starting with bartering to metal coins and paper money to cryptocurrencies, money has evolved with human needs and wants throughout the time. Money has its impact on everything in one's day-to-day life, including luxuries you experience and your social status to simply what you eat. In this documentary, we will be focusing on how the concept of money came into existence, its impact on social, political, and cultural aspects of the world, and its influence on modern technology, society, and the world as a whole. First of all, what is money? Simply, money is a medium with value that is used in trade or exchange of goods and services. Money has been seen in many forms throughout world history. Before money came into existence, people used a system of bartering to fulfill their wants and needs. The start of bartering dates back to around 6000 BC, among Mesopotamian tribes. They would trade goods or services they possess in exchange for the good or service they are in need of. This system is considered the stepping stone to the concept of money. The first known currency in the world is considered to be invented by the Lydians who lived surrounding the modern-day Turkey. In 600 BC, they made metal coins using electrum, an alloy of gold and silver, stamped with some symbols that acted as indicators of their value. In China, they also used coins made of valuable metals such as bronze and copper with stamped letters of Chinese cities. The world's first paper money was invented in China during the Song dynasty around 11th century. The currency was called jiaoji and was a form of banknote issued by the government due to a shortage of copper around 960. Over the years, paper money became a focus in their economy, and a number of factories were built around the country by the Song government to print the jiaozhis. The idea of paper money was first introduced to the Europeans during the 13th century by Italian merchant and globetrotter Marco Polo through his book The Travels of Marco Polo. However, the shift towards using banknotes in Europe didn't occur until the mid-17th century. With the gold inflation happening at the time, the goldsmith bankers of London started issuing receipts as payable to the bearer of the notes. In 1661, a predecessor of Sweden's central bank, Stockholm's Banco, attempted issuing banknotes as a means of payment instead of the copper plates used before. The initiation of issuing banknotes permanently was taken by the Bank of England in 1695. The handwritten notes were issued when a deposit was made or as a loan to an exact amount, with the promise of the bearer getting paid the value of the notes. Standardized notes printed with values varied from £20 to £1,000 were issued by 1745. Fully printed notes that didn't include the name of the payee and the signature of the cashier first came out in 1855. The monetary system is simply how a government provides money in the economy of the country. Throughout history, monetary systems have been inflicted on different regions by their rulers, with coins being commonly used in Greek cities. By the 4th century, the use of coins was spread across the Europe, as well as towards India, with numerous varieties of coins being used in the regions. Exchanging them became a thing by money changers whose business was to exchange coins common in the region. The money changers were predecessors of modern-day foreign exchange market. These exchanges lead to popularizing the use of the Indo-Arabic numerals for currency-related matters because earlier they struggled with performing the calculations that involved a number of currencies. With time, different currencies became the basis for the international monetary system. For example, Persian daric, denarius of the Roman Empire, the gold dinar, and following the numerous European currencies including the Spanish dollar, the French franc, and the British pound sterling were some of the currencies that were preeminent at times. In the post-World War I economy, the US dollar became the basis for the international monetary system, following the Bretton Woods Agreement in 1944. Even with the breakdown of the Bretton Woods system in 1971, The US dollar remained the de facto basis of the international monetary system. Japanese yen and a number of European currencies have been prominent in foreign exchange markets. When it comes to social and cultural aspects of money, many characteristics can be discussed regarding policies and goals concerning money. The history of the country affects their money policies to a greater level. For example, countries like China, South Korea, and Singapore have higher household savings rates. Influence of Confucianism and Taoism have played a major role in these East Asian countries being more inclined to saving money. Religion is also one of the significant aspects that has influence on money policies of different regions. Islamic finance has some very prominent attitudes towards money. One of their major beliefs about money is that money shouldn't have a value of its own, and rather a means of exchanging goods and services that have a significant value for themselves. Islamic finances are also favorable towards the idea of partnership, with the purpose that both profit and risk have to be shared in a fair and impartial manner. Cultural and social aspects of money vary with religious ideas. How families operate in the different cultures, and how individual and the combined attitudes and relationships affect the money-related policies in different regions. Globalization is how the different regions of the world are connected to each other through trade and the development of technology. Globalization is also affected by politics and culture. It is not a process that progressed with the development of modern technology. The network of trade routes, which was called the Silk Road that connected Europe, Asia, and North Africa, is one of the examples of early globalization. Europeans traded glass and other manufactured goods with Asian spices and silks. This led to different currencies being circulated among the different regions of Europe and Asia, which started the utilization of monetary systems around the world as mentioned before. Along with globalization, the technological advancements in the modern world have caused finance and trade to increase throughout the globe. The numerous currencies all around the world have been ultimately led to the path of the utilization of cryptocurrencies in many aspects of trade, and they have gained more popularity through the introduction of Bitcoin in 2009. Cryptocurrencies are gradually getting used more in investments and purchasing goods and services, including digital real estate and software, and in a more damaging level in illegal drugs. The popularity of cryptocurrencies has both their positive and negative effect on the world. Before discussing that, let's see what cryptocurrency is. Cryptocurrency is a type of currency that is digital, and its transactions are verified, and its records are maintained by a decentralized computer system that uses cryptography principles. Bitcoin, which was introduced in 2009 by computer programmer Satoshi Nakamoto, is the first cryptocurrency created. When it was introduced in 2009, the price of one Bitcoin was $0. Throughout 2010, the Bitcoin's price remained under 40 cents. After that, in February 2011, it reached above $1, and in just 4 months, it hit above $8 in May the same year. The COVID-19 pandemic caused a rise in Bitcoin prices after the uncertainty of the beginning of the pandemic. In the beginning of 2023, the price of Bitcoin was almost $23,000. Apart from Bitcoin, Ethereum, Tether, Binance Coin, USD Coin, Dogecoin, and Polygon are some of the most popular cryptos currently in the world. Among them, Bitcoin, Ethereum, Tether, and Binance Coin are 4 main cryptocurrencies. Bitcoin having the total market value of $749 billion. Considering the impact cryptocurrency would have on traditional money, one of the most notable ways is that it has the potential to provide an alternative to traditional banking system. These digital currencies provide facilities for peer-to-peer payment apps, which would lead to lower transaction fees and more efficient transactions. Because of the faster and more secure transactions, consumers can easily adopt cryptocurrencies nowadays. Traditional banking systems are currently searching for methods to integrate digital currencies into their existing models. facilitating digital currency exchanges and providing cryptocurrency digital wallet solutions are some of those. One of the downsides of cryptocurrency, as critics explain, is its lack of regulation can cause to empower terrorist organizations and criminal groups. What can be the possibilities about money? One of the main and most possible predictions for currency is money being digital. With the increasing popularity of cryptocurrencies, there is no reason to predict they will stop their rise in value in the near future. There is the possibility of some societies going cashless, governments offering central bank digital currencies, and as mentioned before, cryptocurrency becoming more mainstream are some of the possibilities that critics have predicted for the future of money. Hope you enjoyed the content of this video. To watch more videos like this, subscribe to our YouTube channel.